Hey guys, it's Wooly from Suerte Welcome back. Today I want to continue the Dark Side of Trading series. This might be the last one for a while, unless I can think of other shorting ideas. Today I want to bring to you the Avalanche strategy. So basically, think of it this way. Let's say like most traders or investors each month, right? Like after they get their paycheck, they take a little bit of their money and they try to snowball it, like month after month, or like paycheck after paycheck. They take a bit of their money and they put it aside for the retirement, or like maybe for like a down payment of a house, etc. And I think that's like how most of us generally tend to operate. I know that's what I did when I was a cubicle sufferer. And after each paycheck would take aside a set like percentage of my paycheck, like maybe like 10 to 20%, depending on how far you want to go back, and you set aside like a certain amount for your 401k, maybe a little bit for your brokerage account, a little bit in savings, etc. And then I think that's how most people generally like to operate. And the reverse is also true. Like for example, for your health insurance premiums, or your car insurance, your house insurance, or mortgage insurance, etc. Like you set aside a part of your money just in case, to protect yourself. And that's how I got the idea of the avalanche, because like for example, when you're trying to snowball, it's generally think of as like a positive thing. You're going uphill and you're rolling like a little snowball up the hill, and then eventually it gets really big. But then what happens if you make a mistake, or you fall down, and then the reverse happens? That big snowball that you've worked so hard for, and now it just like it tumbles downhill. But the acceleration and the velocity is so much more faster to the downside than it is to the upside. And that's why normally when you look at like a stock chart of like certain high flying stocks, or even like some indices, if you take a look back at maybe on certain charts, like maybe say you go to tradingview.com and you look back at like the lifetime of like say like the Nasdaq, or something like the QQQ, or even just like the Dow Jones, or like any other index, and you'll notice like certain indices of stocks, like they like back around like early 2000, you'll see like these big red candles, and that's potentially what we could see. This is just my guess. Maybe around 2022, maybe 2023 if we're lucky. I expect 2021 to be a pretty good year, and then 2022 is kind of like when we're like, it really depends on how people react. This is just my guess. There's a lot of liquidity in the market created by the Federal Reserve, and it could really resemble like maybe what we had in the year 2000. Like if you go back 2 years before, or I think 3 years before, if you go on YouTube or you Google like the long-term capital management crisis, it basically was like this big hedge fund that it could have potentially took down like a whole bunch of other investment banks of the Federal Reserve didn't step in to organize a bailout. Or you can go back to the 2007 2008 financial crisis. Is very very similar. If the Federal Reserve didn't step in to kind of calm down the financial markets, like the economy could have just collapsed. I don't know, and I know like some people don't like it because it creates like moral hazard. Some people say like you should have just like let them go bankrupt, and I'm not gonna stay out of that. I'm just gonna talk to you guys from like a kind of like a trading point of view. Like is there a way that we as like just like everyday investors or traders can take advantage of like these like big crazy drops? So I see some similarities between what we have now and sort of like what we had in the year 2000. For those of you that were like maybe a little too young, or weren't even alive back then. Like I was a young student. I didn't have any money, so like I just you know remember from like the news and just like going back and like watching like documentaries about like the dot-com crash. Like back then, like the internet was still relatively new, and people were like really excited about like what the future could bring, and people were willing to pay like crazy prices for stocks, and it's very similar to what we see now. Like even like right now, like Bitcoin and other cryptocurrencies are kind of staging a comeback, and I see like similar things. Like people are really excited about like e-commerce, digital payments, electric vehicles, and like even like certain biotech. So I see it's very similar to what we had back in the year 2000. So I think like people are starting to get excited, but at the same time, not everybody has unfortunately has been able to participate, because I know a lot of people are still suffering from like kind of like these aftershocks from the pandemic. But I think if people can like slowly start to recover, the actual real economy starts to recover, I think more people will want to participate, and they'll give kind of like the stock market maybe like a little extra push. But then at the same time, I want my viewers to also kind of like protect themselves as well, because I remember like after the year 2000 like crash, a lot of people were hurt. Like if you bought like near the top and you're really that greedy or like unfortunate, and like you could have lost almost 80% of like whatever you had built up over like these crazy like melt up times. And I saw it again in like the year, I guess like 2008 2009. A lot of people lost their jobs, people losing their houses, and it's just like it's crazy. It's really unfortunate when people get too greedy and they don't take some money off the table, or they don't buy some type of insurance to protect themselves. So I think it might be easier if I show you kind of what I have in mind in my Tastyworks platform. I've started like a really small miniature version of this, and this is also like a good way to give you guys an update on my double dragon diagonal position on NIO. I've been like kind of trading in and out of that position, so it looks a little like crazy in there right now, but I kind of like maybe want to kind of walk you through like what I did with my double dragon diagonal in NIO, and like kind of like walk you through like what happened and like what my thought processes were, and what I plan to do in the future depending on what happens with the stock. Because I think this could be like a good maybe like instructional video on like like you don't always have to just like go long like here and then like and then go short like later. Like trading sometimes isn't always like that neat. Like sometimes like you might get faked out. There might like for example like right now like the House bill passed where certain Chinese companies, or actually all Chinese companies, could be delisted if they don't comply with US audit laws or compliance. And I think there will be some type of like maybe either a grace period. I think some people said 3 years, and then because like these things take time like to work out. And I think like, and I kind of hope that people will compromise. I hope calmer heads will prevail. Like not all Chinese companies are bad or malicious. Certain ones are just like there to kind of like be scammy, but there are some other some good ones. I think NIO could possibly be one of them, but again, I don't know. Like it's impossible to know everything, but like I've been following like NIO other YouTubers to see what their opinion is. I've seen both sides, and I think a double dragon diagonal is appropriate for this type of stock, because like it's really like a good trader stock. Like it's like there's a lot of like good long arguments, and then there's a lot of like good short arguments. So I want to be able to like kind of play both sides, And it's a good trading vehicle because maybe as a like a long-term investment, I don't know if it'll be as good as like something like Tesla. Could it be the next Tesla? Maybe, or it could be like the next like trashy like Chinese stock that might be like a scam. But I don't think so. But anyway, I just want to give you guys an update, and I'll let's go to the TastyWorks platform, right? Okay, so welcome to my TastyWorks platform again. As you can see, I my NIO position is a lot different than what I originally had. Because since my last video, let me just quickly let me see if I can bring back the spreadsheet a little first. So originally back then I had like a double dragon diagonal. So I was short the 65 call strike, long the 42 leap, long the 40 put leap, and then short the 29 a near month put. But since then, like I've taken off the near term put, and I was trying to get filled on the January, I guess like the near term put. I'll try again when the market reopens. And since then, I've also added incrementally to the position. So this is sort of like the opposite of the avalanche strategy for the on the call side. Uh, let me let me bring you back to the platform real quick. So as you can see, I've tried to add like some new leap positions, and then earlier in the week I also had like more short calls against it because I normally don't like to just buy leaps or just buy options. I like to sell some premium against it. So in case uh, of a big move, I might be able to get a little bit more premium against the longer term leaps. And if I get a sign, it's not that big of a deal. I've had that happen before. Um, I think one of my positions, you can see like on my Snapchat position, that's also a diagonal. And I'll probably take that off soon. It's in the money. Um, and again, guys, don't just blindly copy whatever I have on the screen. I've so many like moving parts that by the time you see it, like on the next video, it might be already gone. I'm always looking for different premium opportunities. Um, and I think you guys should too. Like, yeah, you always have to kind of develop your own little strategy. You can always go back to my old videos in terms of looking for Wheel of Fortune candidates, and then also for, like sometimes like the shorter term trade, uh, like premium candidates. You can always watch a Tasty Trade, and there's so many traders on there that you can follow, and like around the like after the market measure segments, usually they bring on Scott Sheridan, who's the CEO of Tastyworks. And he brings like kind of like the top 15 symbols um, for trading ideas, so you can kind of like see what other people on the platform are trading, and you can kind of like maybe see if it meets like your own personal criteria. And Neo was one of those. Uh, I guess like one of those like I like to call them crazy stocks because I think like people on social media like Reddit and YouTube and Twitter and whatnot, like this was kind of like the stock, the hot stock of the moment. And the IV rank isn't like that great, but it's not too bad. It's like 26.6. Um, so still decent. Especially when you compare it to like some of these other stocks that you see here in this speculation uh, watch list. As you can see, like the VIX is starting to kind of like go back down. I think we're probably in the middle of I guess like a Santa Claus rally. But I'm always wary because in the past years, December, like we usually don't see like big dumps, but like unfortunately it happens. So let's go back to the chart from let's go back a little bit just to show you what I'm looking at. So in and this is just the let me see the last maybe like the last 5 years. So let's go back to okay. So yeah, it was December 2018 when you can obviously see this big red candle. It was uh, just ridiculous. And of course, this was like earlier in the year. So you never know when the next big crazy crash might come along. And that's why it's always good to have like some some short strategies just in case, and then like you can always like take them off when the market reverses. So let's just go back to NIO for a second. So as you can see, like it had a big move up, and then like obviously it's starting to fall back to earth, and that's why like originally I had a double dragon diagonal so that I can take advantage of both sides. Um, like obviously right now, like the call side, is taking a beating. Um, and then I have like some small little wins here. And then over on the put side, maybe like if I sell the 29 put again, it'll bring in like a little bit of premium against this insurance policy. So it's kind of like getting a insurance at a discount. So this way you can protect like part of your long positions. So like in addition to like the what you see up here, like these short call strikes, I'm also reducing some of my deltas. Originally, this delta wasn't as high early in the week because I already took off like some of the short calls that I had against these leaps. So as you can see, I got a little bit too aggressive. So like I'm taking a bath on some of these long call leaps. But like I have like roughly two years for this to work out. So the next time if I decide to make an update, you might see like it'll be the opposite where like the put side might be taking a beating, but then my longs might be uh doing well, and then like if I happen to have like some short premium against it, I might be assigned or get about ready to get assigned, and I'll just take off the positions so I can take off some incremental like profits along the way. So these are some of the things that you can do as a trader. Because sometimes like the Wheel of Fortune strategies, even though I love it, like as you can see, like the VIX, it's starting to go back down. And it's a little bit too early to kind of like build up my portfolio protection. Um, so we go down here like near my SPY positions. These are older, like I guess I'm not sure what to call these. These are like leftover losers that I had from early in the year, where I was so afraid that like the market was just gonna completely disintegrate. Like you can see like some of these like crazy strikes that I had um like I was getting ready for like the end of the world, and unfortunately it didn't actually happen. So like I was building up like these put spreads, but then like when the I mean it was crazy this year. Like we had like the I guess like one of the biggest or like the fastest bear market in I believe history, and then we also had like at the same time we also had the quickest like bull market recovery like ever, and like in the same year. Like it's completely nuts. I don't know if we'll ever see this again. But it's always good to have preparations. I guess if you trade long enough, you'll get to see everything. So this is kind of like the kind of like the bare bones version of what I had on early in the year. It was kind of a big mess. So this is kind of like this here was like a 10 point wide. At the time, it was like a leap, um, uh, like a bull put spread. So like just to protect my portfolio, because it was really painful to see like losses like that are accumulating so fast, and I couldn't even put them on fast enough, and they were profitable for a little bit, and then thankfully like the I guess like the in a way it's good that there was a bailout, and then now we have to start thinking about like um, ways to kind of build back up our portfolio insurance again. So as an example, so now we have like new leap strikes. So now we have like the December 2023 available. And the reason why I'm using SPY instead of SPX is because like the SPX, if you wanted to do like an insurance on your overall portfolio, this is a really big product. So this will set you back like $45,710, and even if you have a big portfolio, like it's really like painful to shell out that kind of money um, right away. Well, actually, I should have done this. Let me just reverse this. Um, so, well, I mean, the mid price will still be the same, but you get the point. You're losing like $32 a day in decay, and even for like a portfolio margin, like I mean, I would pay out of pocket 12,291 to start, and then depending on how the market does, like this might increase over time. Um, that's why I always like to sell some premium against it. So let's just see, for example, what like even if you sell some premium against it, let's go to maybe maybe if we go a little bit extreme, I mean you can knock it down to like 41,400 if you sell the this 35 20 put against it to create a dragon diagonal, um, because this is still an expensive trade. Again, I could bring the buying power down to it only costs 9,000 to begin, but then like over time, like it could get more expensive. So that's why even for someone like myself, even that's experience and an okay size account, I want to build it up over time. Because like as you can see, my current positions, like I hate having like these leftover like dinky deltas. Hopefully you know, I actually don't want this to pay off because like if we go down to like 100 in on the SPY, that we have like bigger things to worry about. But I do expect over time, like maybe some corrections or even I guess like my worst fear is that we have like another um like a tech bubble like or like a repeat of the 2008 2009 great financial crisis, and I want to have like some type of protection here and there, so I want to build it up over time. So there's no rush to do some stuff like this, but it's good to have like something like this in uh, your back pocket just in case, because you want to have it while volatility is, I guess, like cheaper on a relative basis to like early in the year. Ideally, the time to kind of like really build this up is like when the VIX is like around 10 or so. So when it's like, when the we have like a full on bull market where every sector is booming, so you can have uh, like a chance to buy like really cheap insurance. So for example, like the SPY, like if I wanted to do something right now, I could, let's try this. So this would cost around 4,600 bucks, and let's see, what can I sell against it? So so I can sell this. So that would give me, let's see, 365 is about 1,300 potential max profit. Excuse me, 13,000 max profit less the amount that I pay out. So that's like, less than like $9,000 of protection, just like for one of these trades. So again, like you don't have to do everything all at once because like ideally you want the VIX as low as possible, and then you can start like scooping up over time to build up like I guess like depending on how many deltas that you want to like have around, like I guess like in terms of shorting, do you want like 5% of your portfolio as a short, or 10%? It's really up to you. There's no like magic number that I can give you that says this is what you should have. Similar to how like some like financial advisors say like you should have 60% in stocks, 40% in bonds, etc. There's no magic number. There's like only it depends, and also like how frequently you wanna trade as well. So that's why if you wanna build it up over time, it gives you like about 2 years worth of uh potential protection. And again, this way, like if the market moves up, then like for example, then you would start like the next month, you can buy like the 370 strike, puts, and then and then the month after that 3,075, and then you can ladder it that way. And then as your the short strikes that you have in your month, as they roll off, you can use that the premium to offset like these long put options. And again, you could use this as like kind of like a sample spreadsheet to build out like over how many months that you want the protection, um just to kind of like keep track against your overall like portfolio uh uh basis. So I hope that gives you guys like some ideas as to how you can potentially build up your own kind of like your own avalanche strategy. Because I at some point, like let's say like the market really goes crazy, like as you can see over here, like the market makers already have like the 550 strike, which would be like really nuts. Well, actually, maybe not too nuts. I mean, it depends on how far the bull market can go. And then some of these puts will like, expire worthless, unfortunately. But that's like that's insurance, right? Like you don't want your insurance contracts to necessarily pay off. You rather have like the bulk of your portfolio to be healthy, and then like if you don't get in an accident, that's okay. As but it's there just in case to like at least like make you financially whole if like some if we ever do have like another like nasty crash or something like that. So I hope this gives you some ideas as to what you can do. Or you can do something like what I'm doing with certain stocks, like for trading, like with NIO, where you can do the same thing, where you can like, if you see like a hot stock that and you want to, have something like, to go against your long position. This is something that you can possibly consider. Like you can recycle part of your profits to buy some insurance, and then like like for example, as you see now with NIO, like where I mean it's not down too big, um, but it's certainly not what most people are expecting. So let's just take a look at the daily chart just for so year to date, like there were it was going nuts. Like um, I guess like a lot of people expecting to just go to $60, and right now it's like it's in kind of like in the if you're a bull on Neo, like you consider maybe like nibbling. Um, and again, like I'm using Bollinger Bands, so like if if it just happens to tag like around the $37 level, that'd be great. And then if I actually get a sign on my well, if I get filled on the 29 puts, like that would be a great entry point. Because this looks like maybe like a decent level to even up here. That's like a good because I just see like this green candle, like it looked like it was kind of going down and then like it just shot back up again. So maybe if it retests like this level again, like there's a chance that it could shoot back up. But we'll see. Like it's all part of like trading. There's pretty good there's enough action for both like the bulls and bears. So guys, if you like this type of content, or we have like other ideas, please let me know in the comments below. If you can like and subscribe, that'd be great. That will really help me out. So that gives me an idea, some metrics as to like where you want me to focus my attention to in terms of sharing training ideas and education. So guys, thank you so much for watching, and I'll see you in the next one. See you later now.